Hello everybody, and welcome back to another video with me today where we're going to be taking a look at the overall market and talking about some metrics that I thought would be very interesting. Today's date is now Saturday, September the 3rd, and it's about 4 p.m. here in Istanbul, Turkey. So this is going to be one of the last videos that I make on this particular computer before I completely disassemble this desk here and start building the new rig. I decided to get a very professional type of microphone setup with a boom extension and a very nice pop filter with the same Blue Yeti amp because I plan to start interviewing a lot of successful crypto influencers and traders that I thought would appeal to hear their stories and where they came from and some of their successes and failures and advices that they can give you to give you a little bit of inspiration and perhaps some hope to inspire you to stay in this particular market. So thank you very much for joining me today, guys. For those that don't know me, my name is Philakone Crypto, and I've been in the crypto space for about 7 years now. I coincidentally and luckily just heard about crypto from somebody that was a client of mine when I was in retail sales. And it got to the point where I did a lot of research, invested in Ethereum. And in 2017, the money that came in with the bull market, and especially Ethereum's major rally in May and June, it completely changed my life to the point where I decided to pursue crypto full time and put all my eggs in one particular basket. And now I'm here to provide you with top-tier technical analysis from the perspective of a day trader, investor, and somebody who's been in the market for a very long time now, 7 years, that's seen the majority of all bull markets and bear markets and have weathered the storm. And I hope that my advice can contribute to your overall success in the future. So if you enjoy my content, please make sure you're hitting that like, the subscribe, and the notification button to see all my content that I release. So today, we're going to take a look at a few of the metrics that I've observed from someone else. I'm not going to take credit where it's not due. There's a gentleman that I follow named Benjamin Cohen. He has a master's in economics and a PhD in software engineering, and he's highly respected in the space. So one of the first things that we're going to take a look at today is this particular BTC monthly returns table. And he's actually made a spreadsheet that shows the monthly returns with standard deviation for the past 12 years since pretty much Bitcoin had any metrics and data. And we can see that down over here is the standard deviation, okay? So it can vary between 7.2% to plus or minus 30.3%. So pretty much every single month that we have seen historically thus far has been fairly bullish, right? It provides a positive return compared to the bad months. So if you take a look at the 12 months here, what this says over 12 years is that every single month is generally more bullish than bearish, except for August and September. So August, as we've seen already in Bitcoin, we've seen that for the month of August, we've had one of the most bearish months. If you take a look at where it began here and where it dropped, we fell down about 12%. And if you look at this chart here, where you take a look at, say, where did the rally, well, for example, June was definitely a pretty bearish month as well, where it began and it ended there at 42% drop. You'll see that June in 2022 fell down 38.47%. And of course, last year was the bigger years, right? Where we started to see November fall off, December fall off, January fall off, small rally in February and March. So we could go all the way back over here. We'll see that February, where it began here, it ended up finishing a little bit bullish in terms of where it began compared to where it ended. So it's taking the data from the first of the month till basically the first or the last day of the previous month, right? First day of the new month or last day of the previous month. We can see that March here as well provided a pretty decent net return. And then the bearish run began in April, May, June, July. We had a small rally, and then August started to fall off. And September, so far, we're up 0.3%. What I'm getting to is that August historically has the largest drops. we see it range from negative 6% to 24.7% for the standard deviation. Pretty huge. And then we see that September is also a very bearish month. Not only is it a bearish month, but for the past 5 years, since 2017 all the way to 2021, we've had bearish months. If you take a look on Bitfinex, that's where I originally traded. If you take a look on 2017 here, September was actually still bearish. Okay. So September began there and it ended right around there. It still ended up losing. Despite the whole market being bullish, we saw that September ended up dropping about 40% total. And then it ended up recovering to finish off at about a 10% move to the downside in 2017. Actually, it was 8.61. So what I'm getting to is that I firmly believe that based on history, I wouldn't be surprised if September was a very slow month. I'm sure that we'll have some days that are ups. We'll have some days that are down. But more importantly, we can generally expect a bearish month. Now, I wouldn't be surprised in any way if we actually had a bearish month. I would be more surprised if we had a bullish month, right? But it doesn't guarantee that September will be a bearish month. Just based off of history for the past 5 years, this is what the data shows. And if you take a look at October, generally speaking, for the past 2019, 2020, and 2021, we've had some major returns for these particular years. So 3 years in a row, October has been a really good month to trade in general. One of my favorite months by far. And if we take a look at based off of history, we can see that in 2011, this is a little bit skewed, the data, where this says it's up to 113% on average standard deviation, but it's because of 2011's major rally to $3,000. Okay, so that's a little bit skewed. If we negate 2011 and we just take a look at the data, say from 2013 and up, or even just in general, we see that October has been one of the strongest months here. So despite it 221% in 2010, so I suppose that it's a little bit skewed as well. But October and November have been very powerful months thus far. So in my opinion, if we can hold strong for the next few months, or perhaps until stable coins are finally regulated, midterms are coming up as well. It's going to be fairly slow period. Recession is definitely sinking in right now. Inflation rate hikes. Gas right now from Russia is being limited or stopped entirely. There's a lot of economic macro factors that's going to be affecting the entire market and, of course, crypto as well. In my opinion, there's not going to be a major surge of retailers that will rush into crypto because of the current fear right now. And despite even if a few $1 billion of retail investors came into the market, I don't think it's enough to have major bull runs to $100,000. We need these large institutions to come in where there's this regulation in place, where they have a safety net, where they're actually legally allowed to invest in it, and their clients are wanting them to invest in it as well in these institutions. But as it stands right now, regulation is just around the corner, in my opinion. I've been talking about this for literally 5-6 years now, and it's just a matter of being extremely patient. I think that patience is one of the most important skills that we can have when it comes to crypto and trading in general. And also that discipline to hold strong. In my opinion, dollar cost averaging is what I personally plan to do. Based off of many metrics right now that I'm going to get into as well. Here's another one of my favorites. So this one right here, I don't know if you can see it in high detail. Let's try to just get this in higher detail. Okay. So this is on Benjamin Cohen's YouTube channel. He has a PhD in software engineering and a master's in economics. So you can say he's quite a professional. So what he decided to do was create this logarithmic band or logarithmic trend line that shows you fair market capitalization, fair market value. Okay. So this is marking the peaks on the higher end, the top green, and the lower green is the lower. Okay, and the red line in the middle right here is the fair market value, and it shows how much we can potentially deviate from it. So depending on the deviation, right now, according to him, he says that this is for the total crypto market cap, by the way. So as you can see, in 2014, we peaked at 10 billion. In 2017, we peaked at 1 trillion, right around the all-time high, or near early 2018. And then in 2021, we see that it reached around $3 billion where it double topped there. And right now, based off of this logarithmic trend line of fair market value, crypto should be at roughly $1.1 trillion, okay? And we're about $1 trillion. Right now, let's just take a look at what we're at. My apologies, okay? So he's saying right now that based off of September 1st, the fair market value price should be around $1.77 trillion. At the time of that writing on September the 1st, okay, we were 45% undervalued. Now, it doesn't mean that it's the perfect time to buy because we're undervalued according to FMV. But what it does mean is that we could possibly trend in the lower undervalued compared to the fair market value for a long period of time. So as you can see here, in 2015 to 2017, we trended below the FMV for almost 2 years. And then we can see that over here as well in 2019 to almost 2021, it's almost 2 years until it finally broke this trend line over here. So we could be trending till 2024 is what I'm getting to. But in my opinion, I'm always going to keep dollar cost averaging because there's a lot of metrics right now that are showing that cryptocurrency in general is oversold. It's at a much lower point and closer to a bottom than of course it is to an all-time high, right? And during these times when, for example, real estate is down, you're probably going to consider the people that have cash on hand. They're going to make these sizable investments. When there's more fear and panic in the market, you can see a lot of investors jump in, and that's where the majority of money is made. Lots of money are made. So, for example, when Bitcoin ended up falling down to $3,000 or near $4,000 on February the 6th there of 2018, you can imagine how many people ended up jumping on it. Well, actually, it was $6,000 back over here in 2018, right here. $6,000 February the 6th. You can imagine how many people ended up buying around there because it was near a golden ratio or slightly below it a little bit, right? So you can see how many people jumped in. And of course, the people that take the risk, I ended up buying on this entire drop. So over here, I remember having lots of doubt and fear, of course, right? Oh man, what's going to happen with crypto? There's always that fear looming of, is it going to recover? Is it just a big bubble? Is there any value in it? But if you stick to the fundamentals and you remember why Bitcoin was created, it's easy to believe that it has long-term value. So this is where I accumulated a lot of my crypto, and I bought even more over here as well. Some here. I didn't sell at the top. I wish I did, but you can't live just regretting not catching tops, right? You got to make sure that you're managing your portfolio in terms of selling when you're starting to see weakness in the market. I ended up selling near 50 to 55, more at 45 as well. And now I'm finally starting to accumulate again. And the market isn't looking any bullish to me whatsoever, okay? If you take a look at the weekly chart over here, we see that the weekly chart is just on fire to head to the downside to possibly retest these particular ranges down over here again. And you can see that on the monthly, we ended up finishing fairly bearishly, rejecting that 55 moving average for 2 months in a row, which to me is enough of a bull run, okay? Because I don't think the bulls are going to have much momentum this month leading up until August, October. But October, you just never know. The market could absolutely recover based off of this chart over here. Historically, seeing that the past 3 years, October has been a very bullish month in general. So right now, I'm just going to keep cash on hand. I'm ready to buy if it goes to 17,600. I'm ready to buy at 14, 12, 10 because I do believe in Bitcoin long term. I think that Bitcoin has massive potential to hit $100,000 one day. And if it does, and you're not in the game, you're going to wish that, maybe this is not financial advice, but you're going to wish that you were in the game and you did dollar cost average. The last thing you want to do is regret the decisions that you make today. Now, I'm not telling you to go out and buy crypto, but what I am saying is that for myself, I see that a potential bottom could be in soon. And if I buy at 19,000 or 16 or 14 and it gets to $100,000, it's a lot better to have not the best average prices, but at least I didn't try to catch the bottom and I absolutely missed it. And if you miss the bottom, it's really difficult to find another entry because you just don't know where to get back in. That frustration, it starts to sink in. Where do I enter? I missed the bottom, and it's difficult to change up that mindset and mentality of, hey, it's time for me to get back in, but where do I get into it again? So these are my thoughts. I believe that Bitcoin is probably going to end up challenging these new low regions down over here where the open and the close is to the low of this particular wick over here. So I think that we will eventually test 17.6 again. And based off of I've showed many times how much Bitcoin has dropped. Okay. In the past before, Bitcoin historically drops between 70 to 84% after major rallies. So based off of that, if we take from the top over here, right, 70 to 84%, you could even get down to 10K. But in my opinion, on the monthly over here, where the open and the close is, I think that Bitcoin has a really strong, and based on the volume profile as well, I see a lot of volume around these particular regions, right? Where at these particular price points, I don't have that on me right now, but I've seen those charts before. I see that this is the open and the close. This is the bull trap regions above.